A financial crisis is a period in which people lose confidence in financial institutions. In the old days, before deposit insurance, depositors might line up at a bank that they feared was going to go bankrupt and therefore they would lose their money. So they'd line up and pull out their deposits as quickly as possible. And sometimes pulling out those deposits meant that the bank, having no funding, would fail, would actually go bankrupt. It could be a self-fulfilling prophecy. Nowadays we have deposit insurance, so we don't see depositors lining up in the same way we did 80 years ago. But banks still rely on funding from a whole variety of sources which are not insured. And when the markets lose confidence in banks or other financial institutions, they pull back on their funding, just like depositors run on a bank during a bank run, pull back their funding. And without that funding, banks can fail and begin to bring down the entire financial system with very negative implications for the economy. Now, for hundreds of years, central banks have fought financial panics, financial crises, by replacing the short-term funding of depositors or of other short-term lenders by lending to financial institutions who can provide good collateral, in other words, who can offer good assets as security that the money will be paid back. And by providing that short-term funding, central banks have been able to calm panics and help financial systems stabilize where otherwise we might have had a collapse of the financial system. So that's been a fundamental role of central banks literally since the late 17th century. The Federal Reserve was created in 1913 in part to play that role. And that is what part of what we did during the 2008-2009 crisis, was to make sure there was plenty of short-term funding available for banks. Banks borrowed, put up collateral to make sure that the money was safe and would be repaid. And in fact, every single penny was repaid with interest. And that lending helped our system remain stable, avoid the kind of collapse that led to the Great Depression, and was therefore a pretty successful exercise.